Good morning from Los Angeles. It's Alyssa Corum and Ken Shreve with your market update for Thursday, September 27th. On today's show, we are taking a look at CyberArk, Apple, as well as Accenture. So looking at the major indexes, we have the Nasdaq outperforming up 0.8%. The S&P 500 is up about 0.5%, and the Dow is up about 0.25%. So we do have the Nasdaq outperforming today. Does yesterday's reversal concern you at all?
Well, it wasn't a great close for the Nasdaq at all yesterday. We had the Fed decision on interest rates, and stocks initially rallied on the news. The Nasdaq strengthened, and then during the last half hour of trading, a lot of selling came into the market. So it ended up being a distribution day for the Nasdaq, a higher volume decline, but the percentage decline was only 0.2%. So I think it's important for viewers to remember that even though we have 7 distribution days on the Nasdaq, higher volume decline, signs of institutional selling, only 2 of those declines have came with declines of 1% or more. So it's certainly not a market under meaningful distribution at this point.
All right, and we want to take a look at CyberArk software in the security software space, gapping up today. The stock up 5.7% in heavy volume. We have analyst commentary from Morgan Stanley upgrading CyberArk to overweight and raising the price target to 92. It's currently trading just under the $78 mark here. So we know the software sector has been outperforming, but specifically in security software, how's CyberArk looking compared to the competition?
Well, it's actually doing very well. It's been one of the big leaders in the group. Fortinet has been a strong performer, Palo Alto Networks, Qualys, but you have to put CyberArk right up there. It's based in Israel. This is a company that has made a good name for itself with privileged accounts in corporate America. That's a common way for hackers to gain access. So Morgan Stanley, we actually took a look at this stock yesterday for the IBD 50 stock of the day. So it's just a top performing growth stock, technically very healthy, and this one still could be in the early stages of a nice move here.
That's right, and we are looking at a weekly chart here. So this is a rebound off of that 10-week moving average. So potentially a chance to add shares to your position?
Yeah, or even start a new one, because we were just looking at the monthly chart, and this is a stock that is just kind of flirting with all-time highs here. So you had a breakout several months ago, and then a first pullback to the 10-week moving average when the company reported earnings several weeks ago. And as you can see, it's getting support again, a very bullish relative strength line, and this one looks like a really solid name in security software.
That's right. Well, we also want to take a look at shares of Apple, up over 2% today in above average turnover. It's about 16% extended from its last proper buy point. However, it too is now rebounding off of the 10-week line. Its first pullback since that breakout.
Yeah, I mean, this is just a classic test of the 10-week moving average for Apple, and we say a stock is actionable after a breakout. If it pulls back successfully and finds support at the 10-week moving average for the first time, it's a good opportunity to add shares to a current position or even buy a stock for the first time, and that also applies to the second pullback. So Apple having a good day, and Amazon, another FANG name that also got another price target hike today. So Apple and Amazon definitely helping the Nasdaq's cause in the early going here.
That's right. We have JP Morgan raising its price target on Apple to $272. It's trading around $225 right now, and an overweight rating here. So positive commentary there from JP Morgan.
Yep.
And last but not least, we want to take a look at Accenture, which is falling on its earnings today. Taking a look at the stock, action shares down about 1.5% in heavy volume. It is still technically trading within a buy range here. We saw deceleration of growth on both the top and bottom lines. We had earnings growth of 7% and sales growth of 10%.
So, a company with a really, really consistent track record of earnings and sales growth. So this is just a really solid name. Pays a small dividend, but this is just a classic example of what it looks like when a stock retests a prior buy point. You had a pretty good breakout over a 169.05 buy point. The stock is under pressure today, but really basically coming down close to the last entry here. So technically it's still intact, and it it is, like you said, technically still in buy range, but some big sellers in the stock today, so you probably want to wait for it to firm up a little bit and see what the close looks like. And but you know, no serious technical damage today.
Yeah, well, there is a little bit of a technical issue with our charts. I don't know why. It was like the pattern wreck from the Apple weekly on the Accenture daily chart. So it looked a little funky there, but it is holding above that 170 level. We'll have to see where it goes from here.
Yeah, kind of a little reminiscent of how Nike traded yesterday on earnings, kind of came down to its buy point and managed a decent close. So Accenture bulls will be looking for a close in the upper half of the range. We'll see.
All right, everyone, be sure to head to investors.com throughout the trading day as well as after the close for the latest market news and analysis. And you can also check us out on our social media platforms, Facebook, YouTube, Instagram, and Twitter. Thanks for watching, and see you right back here Friday morning.